Everybody. Today we're talking about how to win a home in a competitive market. And I feel like that's pretty much across the country. Veterans face different types of challenges when they're trying to make offers. We see it all the time where if they're not prepared, or if they're not prepared, then they're going to lose out on those offers. So my name is David Piatek with VA Housing Education. I've been in the lending space for the last 18 years, served in the military for 14 years. Love giving back to the community. And we have
Hi,
Lourdes with us as well.
Hi, my name is Lourdes Fernando. I served 11 years in the Army National Guard and been a real estate agent for 5 years. And I love being in this space. I love helping veterans and educating them just to make sure that they understand how to utilize their VA home benefits.
Yeah, and there's definitely a lot of benefits around the VA home loan itself. And we've done a lot of classes around that. And what we focus on is educating the military and the real estate community about the VA home loan and how veterans can take advantage of the benefits that they have and that they've earned. So, Lourdes, what are we going to be talking about today?
Yeah, so we do have 5 steps. If you do have questions at any point, go ahead and put them in the comments and we can get those addressed. But we are going to be talking about having the right team, having a great lender, a great real estate agent, and a whole team all together. We're going to be talking also about the pre approval, if it's a real pre approval or if it's a pre qualification, how to understand what those are and what that process looks like. We're also going to be talking about searching for properties and how to make your offer more competitive. And then step 4 would be making the offer. And then step 5, going under contract. So you'll know the entire process.
Yeah, and that's kind of the key, and it's in order, right? Because a lot of times people are like, well, where do I start with knowing that information? So, if you guys haven't, please make sure you guys like the video and share it with other folks that you know that are out there talking about housing. So, the first step that we're going to talk about is having the right team. Right now, this is going to go from the lender to the realtor. Lourdes and I can probably argue back and forth on whose role is more important, but both roles are important in the transaction, right? Because a lender is going to provide the financing for the property. When you talk with them and go through the pre-approval process, which we're going to talk about next, they're going to have the product knowledge to be able to put you in a certain program, right? If it's a VA home loan, they need to know all the details of the VA home loan. So they're able to then sell that to the listing agent that this is actually a good product. Because Lourdes and I, we have faced plenty of challenges from the listing side or sellers where they're like, the VA home loan is a horrible product, right? That's something that we always get. So how do you combat that? And that's by having knowledge of how the actual VA home loan works. Another key component of a loan officer's job is to provide you with the entire loan process. So kind of like what we're doing today, but it's always amazing to me when people call me where they're working with somebody already and they're like, can you help explain to me what a loan estimate or the loan documents? And we get a lot of that. And that's something that you're looking for in a lender. Now, if you guys are ever interested in using any of the services that we have, you can easily do that by going to our website or scheduling a call with us. Here's the link. If you guys hit the QR code, you guys be able to set up a consultation with us. Or if you go to vahousingeducation.com, they'll also be there. And also, everyone has a different type of communication style. So make sure that whoever you're working with understands that. Look, a lot of times you're at work during the day, and in the evening, you're looking at properties, right? In the early stages of the process, you want to be able to get a hold of somebody throughout the evening. When it changes over to going under contract, you really need to be available throughout the day because that's when the processing teams are working and you're basically communicating with the lender through that process. So you want to ensure you have that. Now, when it comes to working with the right loan officer and the right company, and what is it that you really are looking for? Think of your own life experiences and working with experienced people, right? if I told you that my cousin Bob is the one that knows VA home loans and this is my first loan that I'm closing, does that instill confidence in you that they're going to close this transaction and do it fast? Right? Think of your own learning curve. Anytime you do something new, even if you're somewhat familiar with a different process, it takes time, and those mistakes cost time and money. And in a transaction, that could mean that you lose out on financing or just not getting the offer. So, how many deals they've closed themselves, how long they've been in the business, because this doesn't happen overnight. And sometimes, and you have to ask if people specialize in purchase transactions and not refinances. Two very different types of transactions around that. And then don't get suckered in by fancy marketing. These big companies, they market to the veteran community like crazy. I remember when I was at basic training, like if you had a USAA account, they paid you a day early. I mean, I was a sucker for that. Who wouldn't be, right? But you have to be careful because a lot of these big brand companies that have tons of marketing, they hire celebrities, they have to pay them significant amounts of money. And what ends up happening is you as the client ends up paying for that versus working with somebody that's local that works on a referral basis. So you're not spending all those additional money that you would normally had to. And
Right.
some of the courses that we have, right, just just asking them questions like, does square footage count against them when they've qualified for a home? And the answer to that is yes. And it's only for VA home loans where they count 14 cents per square foot against your residual income. Like there's a whole piece to that if a loan officer misses small things, your loan gets denied. I mean, Lourdes, can you chime in on some of the experiences you've had working with loan officers that, you know, missed the mark?
Yeah. Unfortunately, this happens a little bit more often than I would like, but it comes down to the pre-approval process. Sometimes they say, "Man, David asked for too much documentation, and they already pre-approved me." And I get a little worried about that because they don't really review the documentation. I had a few situations where we're getting ready to close in a week, and then the file goes to final underwriting and it's denied. It is denied. That means all this time that you wasted over 30 days under contract and the loan is not going to go through. That's a really hard pill to swallow as a real estate agent saying, "Hey, we've done the appraisal, we've done the home inspection. We negotiated with the seller. The seller is going to fix all these things just for the loan to be denied at the very back end." And that's because the lender is not doing the proper homework needed, or maybe they missed something before it goes to the underwriters. And we see that right now. We have right now I have a client who we're going to submit for a VA condo, the whole condo approval process, and it's been 35 days under contract and nothing's been sent over to the VA yet.
Oh, wow.
And it's the communication's not there. I keep asking what needs to be done, and it's very, very frustrating. So, yes, there's so many horror stories. Either the agent or the lender, I'm sorry, does not understand the entire process of what needs to happen, or they don't even know what documents need to be collected to submit over for the underwriters. They're going to kick it back and sometimes even denied it. So that's a huge problem as far as selecting your lender that I've seen so many times. It's never happened with David, and David hears like my conversations at 9, 10 o'clock at night in a panic because can you save this deal? Like
Right.
I hate those calls. David loves them, but I hate that because it's like, man, like what can we do to help these veterans out? And there's been probably over maybe 15 deals that you've saved, if I'm not
Yep.
mistaken, David. And then there was probably 5 that were completely there's no way we can save them. So
Right.
yeah, it's really hard and a lot of
Yeah.
work on all ends and very stressful for the client as well.
Well, of course. I mean, for the client, like, look, at the end of the day, like you have movers set, you're getting out of a lease or you're selling your place. It's crazy amounts of stress gets put on people, and it's heartbreaking when a deal can't be saved. but we're going to talk about in depth. Well, I mean, we don't have that much time, right? So I'm going to explain the differences in that pre-approval process when we get to it. But Lourdes, what do agents do when it comes to the team and what they contribute, or they are like property they're basically manage a transaction, right?
All right. So the agents do play a big role in the home buying process. And one of the things that there are many hats that we do have, but we do have to market the properties if we're representing the sellers. We do have to know pricing techniques and strategies. We do have to study the market. We do this on a day-to-day basis. We also do the negotiations. And we're going to get into a little bit more detail a little bit later on what that looks like. There is the transaction management also. So while we're under under contract, we want to make sure that everybody is doing what they're supposed to be doing, and sometimes working with the listing agents or different resources just to make sure that that happens on a timely manner. We do have to have intensive knowledge of the current market situation, what's going on with the interest rates, what's going on with certain areas, what areas are more competitive than others, and which ones are we able to get good deals for our clients, and then also provide guidance from step one all the way through the transaction. So we just got to make sure you provide that solid guidance over to the clients.
That's awesome. Well, thank you for that, Lourdes. Yeah, there's a lot that goes behind that. I mean, I can tell you the opposite, right? Working with agents across the country where some are going to be responsive, some are not, right? And that's opening that communication to your lending team, right? The realtor and the lender working well together is going to speed things up. People can communicate. They can be on cell phone. They can be on evening calls like this. I mean, if I could, I would call Lourdes at 6 a.m., but she would not be happy.
I will not be happy.
They would not be
I call
happy.
David at 10 o'clock every day, but at 6 is no do it.
Right. So like that's kind of like, and everyone has a life, right? There's definitely a work-life balance to everything. But and most clients are very respectful of that, right? They'll call you if they need something, especially if it's in the evening on the weekends. Like, and that's okay. Like, you should be able to do that because sometimes you're facing tough decisions, like going on, doing an inspection, like we'll talk about a little bit later. And do you back out or don't you? Right. So those are all things you got to factor in. So let's go into the pre-approval process and what that consists of. So there's three types of pre-approvals, right? There's a pre-qualification, a pre-approval, and a pre-underwritten loan. Like Lourdes mentioned, I would say our number one complaint from people is that people say that we ask for too much documentation. And the reason why is the VA home loan is there's small nuances. If you don't provide your pay stubs, they can't look at your net income. Net income is how you qualify for a VA home loan. It's called residual income. If you have childcare expenses and you claim them on your taxes, the VA loan actually requires you to deduct those for your monthly payment, like from what you qualify for. And it's only unique to VA loans. Like the 14 cents per square foot is another thing only on VA home loans. So those are small nuances. A pre-qualification is I talk to you on the phone, I put the information into this magic system, look at your credit report, and then approve you based on what you told me. Now, think about in life when someone and it's not necessarily like they're lying. It's like they might not understand the structure of their finances, and happens all the time where they're like, "Oh yeah, well I included my part-time job that I just started, but we can't use any of that income, right? That requires 2 years of income." Or you might have let's say some self-employment on your tax returns, and all of a sudden you never disclose that because you're like, oh, I just write things off. I don't make money on it. I have a W-2 job. Now all of a sudden we have to count that against you. We've seen that multiple times on clients, right? So pre-qualification is everything's verbal, a credit report is pulled, and then they issue a pre-approval. That's what a lot of pre-approvals are, pre-qualifications. We see that often. In a true pre-approval, what's supposed to happen is that the you're supposed to submit all your income, assets, employment, and your eligibility, like your certificate of eligibility is requested, and it's reviewed by the loan officer, and then they issue the pre-approval. Now, it's very complicated, and most loan officers just don't know that process, right? We know that because we get phone calls from clients around the country saying, hey, can you help us, right? And that they got pre-approved. The best thing you can do if you're really serious about buying a place is get pre-underwritten. So lenders offer where you can actually go through the underwriting process, and your pre-approval is an actual mortgage commitment. That's by far the most competitive way that you can make an offer. Lourdes, have you seen those before?
You do one for me.
Yeah,
Yes. So yeah, that this definitely is helpful in a multiple offer situation. So when you have already that mortgage commitment, you can say, all we need is the appraisal, the home inspection, and we're ready to go.
right.
It doesn't have to go to the underwriter. So back to what we were saying a little bit before, the underwriter makes the final decision if the loan is approved or not. You're already taking it 10 steps ahead of even putting it in the front end. And that way, you have way better chances. So real estate agents can fight on your behalf and say, hey, look, my client's already gone through the process. They're good to go. You don't have to worry about anything. And it makes it so much easier. And this is one of the techniques to increase your approval or yeah, increase your chances of getting your offer accepted.
Yeah, and that's kind of like the challenge that veterans face regardless. It's just like the misconceptions around the VA home loan, which we do classes around that as well. One of the top questions, actually, I almost get every single time I talk with somebody is, when do I go through the pre-approval process? At what stage, right? 6 months out, a year out. I'll tell you when not to do it, which is the day that you find a house and go and wanting to get a pre-approval. That's you don't want to do that. And also that happens more often than you would think. Where the client's like pushing it off. Realtor still shows them a property, and then they're like, "Oh, David, can I get a pre-approval? It's 8 o'clock at night on a Saturday night." And then it's like, well, and offers are due at 9 p.m. on Saturday. Like, those are real conversations that we have with folks. You want to get ahead of that. There is no, if you're looking a year out, 100% recommend you get a pre-approval right now. The number one why you would do that is because I've seen it too many times in my career where somebody tells me verbally their situation, and I'm like, that does sound like it can work. We get to the month that they want to start making offers on properties. We look at the credit, the income, and we're like, you're denied. You have to wait another year before you can buy. No matter what you think your situation is, it's easier to have someone look at your credit and submit all your documents and tell you for sure and order your certificate of eligibility to make sure that you actually qualify for a home loan than it is not to. Number one objection is that, well, I don't want credit inquiries on my credit report because it lasts for 2 years. And I'm going to give you guys a tidbit, and we talk about this in other courses. What you're looking at as a consumer is what's called a Vantage score, or you look at your FICO score on Experian.com or any of these companies. What is basically happening is they've created their own system. So yes, in their world, it lasts for 2 years. In the finance world, credit inquiries only last for 90 days. That's why your pre-approval is only good for 90 days. After that, it falls off. Furthermore, if you have a 45-day window to have your credit pulled unlimited times by a mortgage company, and it only affects you as one credit inquiry, and after 90 days it falls off. So that's like the number one thing that people bring up is, when should I be pre-approved? Again, the sooner the better, and then at least you know that you're set to buy a place. I just I know, Lourdes, you've seen it too, where it's just too many times people are like, I think I'm good to go. And then it's just not, it doesn't happen. And it's not to their fault. It's just like when we pull credit reports, we pull different data than the regular like Vantage score reports do. So I might have collections come up on mine and not on yours. And that's where, and the scores can vary widely. Like you can have a 780 with like a Credit Karma, and you might actually have a 660 with a FICO score. And that's going to affect what you can qualify for. Right now, the number one thing you can do to position yourself to get the best financing terms is your credit score. That's the number one thing right now. If you want to put yourself in a better spot on that. Uh, but Loris, do you have any input on the pre-approval process and what people should do and should, or like, like stories around that?
Yeah, just if if they give you a pre-approval, you just give them your information and they give you a pre-approval, it's probably a pre-qualification. You run into so many issues, like so many issues. So
Right.
one of the things is definitely how David said earlier is ask the lender, how experienced are they in VA loans and how experienced are they, period. And what are some of the challenges that they have faced and how do they overcome these challenges. It's very important to work with a team that knows and understands like what they're doing. So if it's too good to be true, or say someone gives you a pre-approval for so much more than others, that's another thing that you have to also look at, is maybe they're not looking at something that the others found. So that's
Right.
another discrepancy. And then if they just give you a blanket pre-approval, here's 300,000, and you're looking for, in a general area, and say, for example, here in the Chicagoland area, the same house can be $2,000 in taxes, and in a different city, it can be $12,000. So
Right.
that's going to be huge. So so definitely understand, ask them what's the most monthly I can afford, including taxes. That way you can give that number over to your real estate agent. Your real estate agent can say, okay, these are the numbers. And then you do have to find something that you're comfortable with as far as budget wise, even if you're pre-approved for $300,000. If you don't want that payment, you have to really understand what that's going to look like. So those are some of the things,
Yeah.
and also do not get new. Don't pay off credit card debts. Don't increase your credit limit. Don't buy a car, because there's been so many times where in the process they bought a car. Either, hey, I bought it all cash, but now you need this cash for reserves or for a down payment. Now you don't have it. What were you thinking? So I know poor
We've been
David,
there.
when I was in the process, I was at the car dealership, and I'm like, David, what do I do? Do I pay
Ugh,
cash or do I? Because I know, keep your cash. Don't do it. So
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 funny.
definitely any big decisions, big purchases, anything like that, contact your lender and say, and even your real estate agent, if your lender's not that involved, and say like, hey, I need a car. What do I do? You can literally buy a car the day that you close on the property. And I've seen this so many times. They
Right.
buy the house, they go straight to the dealership. You can totally do that. I would recommend it 100%. It's not going to even show, your payment's not going to even show. So you're going to
Right.
qualify for the car. Just don't do it beforehand. So just making sure you have anything that you do differently, or any suggestions, bright ideas, what should I do? You should definitely contact your team and just make sure your team is on board. They're aware that you're doing this so you don't get disqualified.
Yeah, no, that's a great point. And that kind of like leads me to a couple of things, right? So if you take out new debt, which like it's tough because sometimes I'll have clients coming from overseas PCSing here and they're like, I need to buy a car as soon as I land because we have nothing. That's okay. If you do it early in the process and you communicate with your lender and you say, well, this is how much my car payment's going to be. Can I still qualify with it? Yes, you can. All right, too easy. Let's go through it. So sometimes you don't have a choice. That's fine, right? Sometimes people are like, I have a job opportunity to take. I need to take it, but it's in the middle of me closing on a home. It can be okay as long as you're going to similar lines of work and it's a W-2 job. But if you're switching from being a W-2 employee to being self-employed, you just You just canceled yourself on the transaction. And we've seen that as well, where people think they're getting hired as a W-2, they're getting hired as a W-2 employee, but they're actually on a contract by contract basis. Guess what? That's considered self-employment uh, in the lending eyes, and you need 2 years of that. So really tread on that. Don't try to hide things from your lender. Be open, and that way they can walk you through that. Now, Lourdes, you made another good point, which we do get a lot where we're normally on the opposite end, Lourdes. We're normally approving people for more because we know the guidelines, right? Now, there's a difference between a loan amount and a mortgage payment. You're never pre-approved for a mortgage for a loan amount. You're always pre-approved for a mortgage payment. Like you said, if I'm going to use Chicago as an example. A $300,000 single family home might have like 5,000 in taxes. That same home in Lake County is going to have 12,000 in taxes. Huge difference. Now, if you look at condos, you're going to see large differences in what the monthly payment is. So you might be pre-approved for 300,000 with a max payment of 3,500. But if you switch areas or types of properties or different budget, like taxes, HOA dues, that's going to also significantly change your budget. We had a client buy a $200,000 home. I can't even make this up. The insurance company for the home, it was $4,500. And I'm like, how is the insurance? She's got great credit. Everything is good. It was a Greystone building. The replacement cost was $700,000 because they don't have the tools anymore, and that type of stone to get is really expensive. So we didn't even anticipate something like that until we got the homeowner's insurance quote, which thank goodness they still qualified. But those are things that can come
Mhm.
up in a transaction, right? So definitely differences in that, and make sure you're comfortable with the mortgage payment and how much you're going to be paying on a monthly basis. Because at the end of the day, it's you making that payment, not us. Now, if you have a service-connected disability, things get a little bit different because depending on where you are in the country, you might have to pay property taxes. So that could be something you could budget into it. So, Lourdes, do you have anything to add to that?
No, not
Awesome.
not to land.
Good. Well,
All
take us
right.
into the next step.
Yeah, so next step is searching for a property. Now this is fun. This is my favorite part is looking and finding that dream home. It is for the client, it can be sometimes nerve-wracking because you don't know what to nerve-wracking but exciting at the same time. And I know we talked about this in another class, but it's so important to identify a few things before you start looking for your property. And the closer you identify this in the beginning, and we have some clients that already know all this and are like, perfect, they know exactly what they want. It's easier because they can well, it's just easier all the way around. So the first thing you need to do is identify your criteria. What are you looking for? Are you looking for condos? Are you looking for single family homes, multi units? What is it that you're looking for specifically? What location do you want to be in? And here in the Chicagoland area, we have over 77 neighborhoods. So it's crazy just within Chicago, but where specifically are you looking? Some people give us, you know, some corridors west of this, east of that, and where is that location? What is your budget? Now, I did not say pre-approval. I said budget. What is your monthly budget? Quick story, when we got
Yeah.
here, we had a pre-approval for what, $300,000 or something like that, and our monthly payment was close to $3,000, and that had to do with the taxes that um, that creeped up $500 extra within the first 6 months that we lived there. It was horrible. We had to sell the house, move, it caused a lot of problems, a lot of issues. So budget, budget, budget is something that you really want to focus on. So making sure it's within your pre-approval, but that's going to play a big factor. What are your deal breakers? If you're like, I want to move in ready home, I work 14 hours like Lourdes, and I don't want to do any work, then that's going to be a deal breaker. So we have to identify those immediately. And then what are your must-haves? Are you looking for something that you're like, if it does not have a garage, I'm not even looking at it. So these are the things that you want to give your real estate agent up front just so that they can have an idea of what you're looking for. So if you send them, 20 properties on Zillow, they can say, okay, all these don't meet your criteria. Do you really want to see these? And it makes it so much easier for you. That way you're actually seeing the properties that meet your criteria. It is in some areas very, very competitive still, and you just want to make sure you're in the properties that make sense for you and you're locking them down because the first one to put in that contract usually, well, if it's a multiple offer situation, no, but you just want to make sure that you secure a property that you like. So that is probably the most important when it comes to searching for a property.
That's awesome. Yeah, and the budget, as long as it's under what your max pre-approval payment is, then you're good to go. Just keep that in mind. And Lourdes, what happens when, let's say you have clients that are PCSing to the location, or if a client has a very busy schedule, but they still want to be able to look at properties. Like what happens in that sense for overseas PCSing, doing a work move, or you have a very busy schedule, but you want to buy a home?
You just have to make sure your real estate agent knows how to do video tours because
Yeah.
I've done them. I've done them a couple of times for clients. A lot of my PCSing clients, the first day that they get here, they get the keys to their house and they're going to their closing. So everything is
Wow.
done virtually between the walkthroughs. And one of the things that we do on our team is we'll go in there and we will I know I've talked about smells, I've talked about neighborhoods. I mean, like, not talked about neighbors, but as we're on the video tour, I'm showing them the neighborhoods, what that looks like. That's very important. Anything that they've said while we're touring these properties, they're like, okay, yes or no. If they're really tall, I say, "Hey, how tall are you?" I'll get in the shower. If they're tall like me, I'll put my heels on and I'll go in the shower and be like, "Hey, you're probably not gonna fit in this." And just show them what's, of course, I'm fully clothed, but like I am just showing them everything that they need to know. If they need maybe like wheelchair accessibility or anything that is their needs, I'm just gonna make sure I show them during that walkthrough and very expressive about that. And during the home inspection, also, anytime that the inspector is reviewing certain things, I'm there on FaceTime with them, just making sure that they understand. And like I said, I've done close to about ten where they haven't seen the properties. Sometimes I won't even meet them until a couple months after closing.
Right.
And that's happened. But yeah, so we do make accommodations, especially for those that are PCSing or transferring over, retiring, that they just don't want to deal with it.
Yeah, and that's the challenge, like especially when you don't know an area, you're coming to it for the first time. You need someone to walk you through that. But to your point too, is like I've sometimes meet a client a year after closing because like their family might have moved here. We met at an event. I'm like, holy cow, like that's kind of crazy on that. But that's awesome to hear on that. So, and just remember too, like while you're searching for a property, you should be reaching out to your lender or your lender reaching out to you once a week or every other week just to check in to see has anything changed, right? If you have any questions. Sometimes like you're looking at multi-unit properties, right? Very different. Like you need a lot more involvement from the lending
Yeah.
side because they have to look at each deal and be like, yes, this is going to work or this is not going to work, right? And then agent is going to let you know that they know the minimum property requirements per the VA handbook. Right? It's a lot of stuff to go. They'll also, when you're searching for properties, they can tell you like, hey, this property is going to have X amount of things come back from the VA that might cost you X amount of money, which can help you determine like, should we even look at this property? Like, should we even make an offer? Have you kind of run into those situations?
Yeah. Yeah. Yeah, actually.
We
um,
do. We run into them all the time, but yeah.
all the time. Yeah. Yeah.
Where
So
the, yeah.
so yeah, once again, it's based on, what they're looking for, if it's gonna make sense for them. and really knowing your criteria at the end of the day, and we can go from there.
That's awesome. Well, thank you for that. And then, well, what happens after searching for a property?
Yeah, after searching for a property, we get to say you love the house, we can go, or the property, we can go ahead and make an offer. And there is some people, just a lot of military people, just want to hurry up and sign everything. But it's very important for you to make that time to go over this with your real estate agent. And I get it. Sometimes you just want to get it over with. Lawyers, just give me the meat and potatoes, and let's get this thing done. But please allow some time to go over just some of the major highlights of the contract. You want to also have some time to review the terms. What terms are going to be needed? How many days you need to close? Can you put down how much earnest money can you put down? What is your kind of like your max? Also, if it's a competitive market, you need to know that, hey, it's a very competitive market in this area specifically. So we got to go in very strong and very quickly if this is something that you're interested in. And then also have some time to review the competitive market analysis. So just I know that that's a lot to a lot to take in, but if you do take the time to understand how those three things come into play, it's going to help out with your offer, and then also your level of comfortability moving forward to to start with this process. So, David, what comes next after that?
Yeah, so what you really want to make sure once you're like, hey, we're serious, we found a place that we love. One, it's going to be timing. Like you have to most likely move pretty quick, right? You can't be like, I'm going to think about this for a week like you used to like 10 years ago. It's like you have an hour to think this through. But you really, this is where your team comes into play, right? Reach out to your loan officer. Has the market changed? Am I still qualified? Are rates at 50%? Or are they still something reasonable, right? You have to because some people, especially when we saw initial rate increases, remember, Laura, people were qualified like at 5.5, and it jumped up to 7, and then they were like, "Hey, we're going under contract." I'm like, "Hey, do you guys know what like, hey, this is the current situation," which it all makes sense still to buy because you can always refinance. There's a whole the video that we have around that, but just knowing how that component works, right? You want to make sure that you know that your payment is good and you really qualify for the property. The next thing, it helps the lender know that, hey, the agent is going to be making an offer and they should be CCing the lender on the offer. So with the contract, so the lender can reach out to the listing agent and walk them through your pre-approval. I can't tell you how many times we get or people think that the VA home loan is not competitive. Lawyers, we fight that on a day in, day out basis.
Every time.
Yeah, it's almost every time. And sometimes I get to a office, you know, it's kind of crazy, right? Veterans get sometimes steered away from their benefits, which you shouldn't be, right? But this is why a team is going to help you walk you through that. The
Yeah.
agent, like when you make an offer on a property, you give them a full spiel of the whole VA home loan process,
Yeah.
what the process looks like, what clients can and can't do. And then we do the same thing when we call the listing agent and say, look, all their income has been submitted and verified. Their certificate of eligibility is here. They're well qualified for the VA home loan. So it just opens that communication to be able to go into the like a negotiating table for you, for the realtor and the client, right? That's why
Right.
that's so important for that piece.
Yeah, we won. I remember we won an offer, I want to say a year and a half ago, when it was stupid crazy competitive offers. Like it was, I think the agent got over 20, and it was a multi-unit, sold it for one day, or it was on the market for one day, and it was overwhelmed. And we weren't the highest offer. We weren't the best offer as far as the terms, because we had the VA home loan. However, David called him, and he really liked our conversation. We had a conversation with him, with my client, after the fact. So I was like, yeah, telling him all about my client. And then David immediately called after the offer was sent off. And he was like, well, your client's going to close. And I feel confident that your client's going to close. So we're going to go with your offer. And you're not the highest, we're the best. But we like you and your team. So we're going to go with you. So that
Right. And that's the
definitely
thing too. It's like when you
matters.
walk the yeah.
Yep. Yeah. So I'm going to talk a little bit about going over the how do you determine the offer price? Because this is a conversation that I have with a lot of my clients, and there are a few things that needs to go in with making the decision. Is what are properties being sold in that area? So you're going to ask your agent to provide you with a comparative market analysis, CMA for short. And what that's going to do, it's going to show you everything that's sold within a 1 mile radius. Then you're going to go in there and you're going to see the properties that look like the subject properties. So if it has 4 bedrooms, updated, the whole nine, you're going to be looking at properties within that 1 mile radius, 4 bedrooms, updated. And then you're going to come up with, and square footage is very important too. So you're going to look at the square footage and you're going to come up with a price that is similar to what's being sold. You're also going to pay attention to what the market time is. How long has this property been on market and what's the average market time for that area? So if the average market time for that area is 7 days and it's been on market for 30 days, there might be some negotiation power at that moment. So once again, ask your real estate agent what that's looking like. Is there any other offers on the table? This is something that sometimes the agents disclose and other times they don't. So we just want to see what's going on with that. And then also what the current market conditions are. So I guess we kind of talked a little bit about that as well. Pay attention to the news. What is the news saying? So this is very important too. Is I know we've been seeing on the news interest rates are going up, interest rates are going up, interest rates are going up. So we're starting to see less inventory on the market. So less inventory, it might still be a little bit competitive. That doesn't mean everybody completely stopped looking at homes, but what's going on with the news? Determining the seller's motivation. Are they already out of state and looking to hurry up and get out of here? Or, if we receive an offer, we receive an offer. We're stern with getting our list price. And then and yeah, so those are pretty much the things that go into determining a offer price. That's why having a knowledgeable real estate agent is critical, just so that they can give you all the missing puzzle pieces to this and you can submit a competitive offer. Do you have
That's
anything to add?
awesome. No, I mean, can you hear me okay?
I can hear you fine.
All right, perfect. Yeah, for some reason it looks like it stalled up a little bit, but yeah, no, I mean those are a lot of good points that you make on that, right? Because there's a lot of fear mongering around the uh, around interest rates, or should you buy, shouldn't you buy, and really talking with someone that's experienced will tell you like, look, this is a cyclical market, right? In time, rates will drop back down, right? This is going to be just a normal thing that happens in our business. Now, when you talk about earnest money, I know you mentioned it a little bit earlier. How much do people normally put down for that piece?
Yes. So once again, this depends on how competitive you need to be. So mostly and it depends on the market too. So this can be completely different nationally. I always go in $1,000 earnest money unless there's multiple offers. Then I'll go closer to that 1 to 3% earnest money. With the VA home loan, you don't have to put a down payment. So that's usually one of my biggest fights is that. But if it is not competitive, no offers, I'm going in for a straight $1,000. Now, that does not work in most areas nationally, but here in the Chicagoland area, it does. So typically, we're seeing 1 to 3% earnest money. And then in really, really competitive terms, then you're seeing a lot more than that 3%. So it just depends.
Well, and now from a
David,
lending
is that what you're
side,
seeing too?
Yeah. And so I mean, so well, it depends on the market, right? I see as little as $500 down, but I sell. So it just really depends on just what the market that you're at. Now, one of the top questions that we get from people around that is, if I put that money down, is that money protected? One, and if I'm doing no money down, how is that money? Where's that money going to go? So, like we talked about, knowing the contract and the terms, all of that's going to be in there, and how that money is protected, right? If you walk away from the deal, or if the sellers want to walk away, all of that's going to be outlined. You do a home inspection and you're like, wait a second, this is all jacked up. I want it out of this contract. Well, you can get that money back if it's in your contract. Now, if you're doing 100% down payment, then that money will be first used towards closing costs. And then afterwards, that money is going to go back to you. So whatever's left over is going to go back to you. So it's pretty cool.
Yep. Yep. I know I got a big check. All my earnest money came back to
And how
me.
long does that process take typically to go from for each one of those?
Yeah, so once again, it depends on your lender, on your team, when you can have access to the properties, when you're getting all this documentation back. And we're gonna step 5, we're gonna be talking about the entire process. So we're seeing anywhere between 20 days upwards to about 45 days for a single family home. And for condos, we're looking a little bit longer at 35 days. And if the lenders don't really know what they're doing, then it can be closer to that 60 days. Or also, if the condo, the association isn't being responsive, it can take a lot longer to get those condo docs. So, once again, condos can be 35 to 60 days, whereas a single family home, about 20 to 45 days for closing.
Right. And so, but we've done this, keep in mind that typically a 20 to 25-day closing for a single family home is pretty normal. For condos, typically 30 days, even with a condo approval, but things have to line up, right? Normally when they get out, it's because either some type of issue has come up that's unforeseen. I mean, it could be as simple as like, we're supposed to close this week on a property, but the title company wanted a survey, a new one, so now we're delayed 3 weeks, right? Those are things you can't control. So those things to kind of keep in mind. But let's talk about the going under contract component.
Yeah, so going under contract, there are a lot of moving pieces here. So, once again, your real estate agent is just going to guide you right through that process. The first week is a little crazy because you go under contract, you have to submit the earnest money, which we spoke about earlier. You have to have a home inspection. You have to submit documents over to the lender. So, do you want to talk a little bit about the loan application, David?
So from the loan application component, right? So you went through a pre-approval process. It might be a while now. So now you're going to have to get updated documents to your loan officer. That's when they're going to lock it. You want to lock that rate sooner than later. Then they're going to put all the disclosures together and send them out to you for signature. Now, don't be alarmed. You do not need to submit a blood sample. It might feel like that just because you're signing like 100+ pages initially with your application and disclosure, right? That just gets the ball moving, because once you're under contract, the loan officer starts the process, but then it gets kicked back to the realtor because there's a couple things that they need to do. So, like, what happens, Lourdes, once they start that process?
Yeah, so the next part is the inspection review period. So this is you're going to be reviewing everything that happened with the inspection, and you're going to see if this is really the home for you. So if you didn't go in as is or anything like that, you can ask the seller to fix some of the major safety concerns of the property, and the homeowner can or the seller can say yay or nay or provide you a credit. And once you come to terms, then you move to the next step. At that point, you want to get the homeowner's insurance, and then they're going to order what's called the title information, where they're just going to make sure whoever's selling the home can actually physically sell the home and nothing is going to be coming up, like city violations that are reported or contractors that did some work that weren't paid for that specific work. So all that is going to be, that's all going to be checked. And then, David, what happens after that? I think
You know what,
David's
Loris? I'm
frozen.
having
Okay.
a communication. Hold on, I'm having some technical issues here. Let me see if I can switch my.
Okay. You're clear now.
All right, Loris, can you hear me?
Yes, I can hear you. I can't hear you no more. David, we can't hear you.
All right, can you hear me?
Yep, I can hear you now.
Awesome. I had to switch from my thing, so we're improvising and making this work. So, what's the last thing that you said?
Yeah, so can you go over the appraisal and the appraisal process? So what happens after we start to look at the title and everything like that?
Gotcha. So the important thing to note is that lender orders the appraisal through the VA, right? So the time frame to get an appraisal back is about 14 business days, which are 10 business days. So they typically come back a little bit sooner. But again, that lender can't order a rush on those. Typically, you're going to see that when you do a conventional loan, they'll allow you to order rushes on those, but otherwise the lender just orders it through the VA portal. Once you sign all the documents and get everything back, your loan starts to go into the processing phase where they're going to request like your verification of employment, all types of documents around that. Like Lourdes was saying, you guys get the title information, we request it. You get the clients get the homeowners insurance quotes, we get them updated. We get any missing documents, and then it goes into underwriting, right? The difference between an underwriter is they're actually looking directly at the like every single document, very granular to what the VA requires. Then they might come back and say, okay, based on what you guys submitted, there's these documents that are missing, and you never get it right the first time just because we're waiting a lot of times for third-party invoices or something comes up because someone didn't disclose something, right? So that's the only time those things come up. Now, a lot of people get frustrated too during underwriting because they're like, why did they keep asking for stuff? Remember, it's us against them, right? It's us, the client, the team on this side saying, let's get what the underwriters require because the VA is going to require it at the end of the day. So you don't want to hold up a transaction and go back to them afterwards, right? That causes a lot of pain. Now, once you've provided all your conditions, all the documents are back, basically at that point you go to what's called a clear to close, and once you get that news you jump for joy. But is it officially over yet? Not yet, until those keys are in your hand and the loan has funded. You can walk away, and at that point you can finally be happy.
Yes.
Because employers do a verification of employment the day of closing, so you got to keep that in mind, right? Another thing is that if you have, and I should have touched about this when you did a pre-approval, but it actually does affect you at closing. Let's say you go under contract and then you shop a couple more times for lenders. If you don't tell your lender that you went and did that, and they do what's called the soft credit inquiry a day before closing, and they see those credit inquiries, guess what's going to happen? They have to go in and verify each of those credit inquiries to make sure no new debt was taken out, which can just cause issues for you. So don't do that. We've seen it happen too many times.
Good to know. Thank you
Loris,
for that. Yeah,
yeah.
so after when the lender tells us that we have the clear close, we do have to schedule a final walkthrough to go back to the property just to make sure that nothing has changed in the property. And that's very important because I've gone and we did the final walkthrough. Literally, the water heater's leaking, and my client's got a new water heater. I think you remember that one, David, but I mean, we're like, we didn't do anything. The water heater is just leaking, and literally, we heard the noise. And thankfully, he was very happy because he got a new water heater. The seller was not happy at all, and we just want to make sure everything is good to go. And also, all the possessions have been removed from the property. So a lot of the times, if there's furniture there, there's trash there, there's paint, there's all these things. We just need to make sure that it's not being left there for our clients to be there. And then after that, we go to the closing table. We just make sure everything is good to go. The funding gets there. And then once the title agent says funding has showed up or funding's here, then hooray, hooray, you get the keys. Now you have a new home, which is awesome.
That's a good feeling, and a lot of people wait a long time. I can't tell you how many times I get phone calls or we get calls from people that 70, 80 years old, never bought a home, didn't even know they can use their benefits still. And the whole condo thing, like you mentioned, Lourdes, is a huge thing. We
Yeah.
do have a question from somebody. So this is a good question. So for remote properties, does the VA require a well and septic test prior to closing on a VA home loan? So the VA typically requires a well inspection and a septic test that is paid for by the buyer. Now, it's not always the case, ironically, and I learned that recently. It's typically when we've seen them, and again, every situation is a little bit different. But there's been a couple times on existing septics, they didn't ask for septic inspection. But
Mhm.
that's something that you want to be able to tackle ahead of time because it can take a couple weeks to get an inspection depending on where you are. So those
Right.
are things to consider on that. But that's a great question. Also, if you're in rural areas or remote areas, and you have an easement, meaning like you have to cross someone's driveway in order to get to yours, you would need a private road agreement typically, but the VA got rid of that a couple months ago, so that makes it a lot easier for those folks that are further out into the wilderness, which I would love to be as well. So if you guys have questions, please drop them down in the chat. But that's a great question. Thank you for that.
Yeah, and
So
even
thank.
on some not to get you off, but on some contracts, they also allow the seller to pay. It will be in the contract for the sellers to pay for the well and septic. So if that's on your specific state's contract, you can always get the seller to pay for that as long, once again, that it's not a competitive situation, because the more things that they have to pay for is always, that's more of a hindrance for them. But if there's no offers on the table, then absolutely, why not ask for that?
Yeah, and I'll share a quick story before we wrap up. It's like we helped a client recently that they had about $8,000 worth of repairs, but the sellers knew it. They knew they were a veteran family. He was a contractor as well, so he didn't care. He's like, whatever the appraisal comes back with, we will fix it. We know that we're gonna have to do work, and they honored that, and it was an awesome. Like it was just great that they extended. So there's definitely opportunities out there
Right.
for that. So, Lourdes, thank you for your time for coming out. Everyone that watched the video, as you guys continue, please make sure you guys like and subscribe to the channel. We're gonna be pushing out monthly content like this, talking about all things around VA home loans and home ownership across the country. We talked about having the right team, making sure you're pre-approved, how to search for properties, offers, and going under contract. And that's really the beginning and end of a transaction. Like all of that's compacted in there. If those 5 steps are done right, the rest of it should be pretty smooth, right? So Thank you again for everyone that joined us. We'll be continue to check our chats as we go on throughout the week. So if you have questions, drop in there. And you guys have a great evening.
All right. Thank you.